Good evening and welcome to this evening's live stream. This is the last stream of the day. Done three today. You guys are very privileged. I'm just setting up a couple of things in the background, so please bear with me. I shall be with you shortly. Shall be releasing my intermission screens and getting straight into it. Feel a bit productive today. I'm just setting a few things up in the background. I will shortly be introducing the stream, introducing the topic at hand. Today's or this evening's title is how to be profitable or how to make profit within the bull run. So we'll be looking at a few things. I will touch on those, in a few minutes. Just bear with me, setting up a few things, making sure that all of the trading views, the indicators, and all that good stuff are working correctly in the background. So just bear with me and I will be with you shortly. Good evening, everyone. I am still just cleaning up a few of these charts from the previous stream. So please do bear with me. I will be with you just shortly. A few things I will leave on the chart just because I think they will be useful in terms of giving an overview in terms of what we're doing. However, I want to just get straight into it, make this a very informative video to show you a full process in terms of processes that can be followed. And then we will get into a few reasons and a few other things in terms of why we do what we do. Again, just bear with me for a few moments. I'm just cleaning up some charts. I will be launching the stream and kickstarting things in less than a minute's time. Right. Good evening. Welcome, one and all, to this evening's live stream. As I said earlier, it's the third for the day. I have felt very productive. It's just, I think it's that nature of wanting to improve every single time in terms of the content that I'm putting out there. So I am going to keep the live streams coming and flowing and, being as productive and as forthcoming with content as I can be. So yeah, that's a benefit for you guys. There's a lot of material for you to go through. And it just means that, I'll find my feet in terms of presenting in this manner. And hopefully you're able to learn a thing or two and implement it in your trading. So without further ado, I will introduce myself. Welcome to the ThetaFin channel. We provide an insight, right? An insight into investment excellence. Bear with me. And yeah, we are a an investment platform, an investment channel, an investment content creator. We cover all market spaces, not just crypto. I know that it has been, and the content has been very crypto heavy over the last few streams. That's just because of market conditions, market trends. We are a relatively new channel trying to grow. Therefore, the content that we are putting out is appealing to what's happening in current market trends. So, yeah, without further ado, I am a professional CA, so Financial Conduct Authority accredited investor or trader. I got my accreditation in 2021 via Pepperstone, no affiliation and no sponsorships or anything like that. It's just a reputable broker here in the UK where I am streaming from. The time is currently 9 p.m. British or, Greenwich Mean Time. And yeah, we're here to talk about a few things in terms of identifying the next bull run. How can you, crypto bros and sisters out there, be able to identify how can you identify the next bull run to ensure that you are getting into the market at an optimal time, making the moves that you need to make on the markets, taking great profits, and being able to execute a reliable, risk averse and I guess, yeah, risk focused system or trading system. And how would you be able to implement all of this in live market conditions? That is what we're going to go through today. I will also be touching on understanding the crypto market cycles. Not so much cycles as itself. I will be showing and sharing the ThetaFin philosophy on market cycles and things of that nature. I'll be showing you how to identify bull runs and bull run signals, investment strategies during the bull run. So whether it would be, holding, trading, or, diversification of your portfolio. I will share, some tips in terms of managing risks, managing your trades, applying stop losses stop losses and take profits if you are trading. If if your platform offers you direct trading in both directions, because I know that some platforms only offer you the ability to buy, and selling in that sense just means that you sell back whatever you invested. So they are two slightly different things. We'll be discussing a few strategies around that. I'll lightly touch on altcoins and emerging trends, and again, how to apply these systems and principles that I will show you today into those live markets, into those live assets. I'll also be talking about a few things on wallets, security, and that kind of thing. Again, not too much because it's not really too relevant. We're interested in trading the items rather than holding. But again, if it's a strategy you want to implement, I will be showing you and discussing lightly on in terms of my views on crypto wallets and how to manage the security side of things. And then we'll be closing with some take profits and exit strategies. If there are, several people online, and if you're watching this after the fact and you've got questions, I will be quite active in terms of answering any questions and making sure that your curiosities are answered. And I think that's the kind of the best approach. That's what we aim to do here, just giving you that insight into investment excellence. Again, once again, we are ThetaFin. Theta, as in the measurement of change in options, and it's a Greek term. It's one of the Greeks in investing, and it refers to risk and the decline in terms. It's a measurement of the decline over a certain time period. I'll also be touching and giving you guys a couple of technical indicators along the way as well. Again, just improving on the output that and the format of these live sessions. So yeah, without further ado, I'm going to go through just again. It's going to be a bit more fast paced. If you want something a bit slower, something a bit more focused, something a bit more beginner centric, you can go back and watch my previous stream, which I put out earlier today, a few hours ago. And through that video, you will be able to go through the whole process and kind of understand the fundamentals in terms of why it is that I'm doing what I'm doing, and the philosophy, and kind of a deeper dive into what's going on without all of this confusion. Again, this particular stream today is centered more around trading view. I have been focusing and using um, MetaTrader. So what you see on screen currently, because you can't see my keyboard, of course. So this is what you've been used to in terms of my last few streams. And I know that this is kind of something that's going to be a tool that's more familiar with some of the viewers that have come from a forex background. They will know and will have used MetaTrader before, whether it be on their phones for placing trades, or in this format for doing their technical analysis on a Windows machine. Either way, I'm trying to give you the best of both worlds, so you can see that these tools and indicators are applicable and available for you for free via TradingView, so that we can go through the process. You can implement it, you can watch along, test it, and come to grips with some of the philosophies, and get a better bearing in terms of the things and instruments I'm talking about. I won't try and bog you down with too much technical jargon in terms of what's going on. I will try my best to keep it very light so that it's palatable for all viewers and all experience levels. So without further ado, we've come to talk about understanding and identifying bull runs. I'm going to try and stay as on topic as I can. Again, I've got a set of notes in front of me, so I am kind of, looking at the time, measuring in terms of what I'm discussing, and I will try and stick to that time format. So first things first, understanding the crypto market cycles, right? Um, First things off the bat, I will not be showing you guys things like support and resistance and drawing trend lines or any kind of candle patterns to try and remember. It's not the approach that we take here at ThetaFin. We implement a strategy that is predominantly indicator heavy. It's an algorithmic approach, and algorithmic in nature, meaning that, there are a set of rules and principles that we need to follow that all depend on other elements, other variables, all being positive, right? So that we're using confirmations across multiple technical indicators, right? To help us kind of just make informed decisions. Once again, like, this is going to be such a core piece of everything that we do, everything that we teach, everything we learn, that you learn, whether it be on these live streams, in this format, or on one of the courses, if you end up purchasing a course, to go through these systems in a bit more detail, to learn and receive some of these indicators, and at a higher level, depending on your level of expertise and kind of the exact strategies that you're interested in, and the exact depth of your portfolio and how you want to implement them. So yeah, so once again, the in terms of the market cycles, we're not here to kind of discuss support, resistance, and all of that kind of stuff. While I am not here to bash it, because it has its place, it has its successes if used correctly. What I am trying to teach and implement here is a system that shows you that with a set of reliable indicators, you can make great and very accurate um, um, decisions when it comes to your crypto portfolio and your crypto strategies, right? That still is based on the same principles, in terms of identifying market direction. We want to be trading with the trend, not against it. So we need to be able to identify, the direction of um, the market very quickly. We need to be able to accurately determine when we are in a trend, and then also when a trend has ended. And all of those principles still do need to be applied. We do need to follow them strictly. We're not going in blind and letting all of the indicators do all the work for us. We do need to have a a degree of responsibility in terms of understanding why we are doing what we are doing. And that's what I'm here to kind of assist you and show you how powerful these tools can be when used together, and how much they remove the guesswork out of your decision making. You shouldn't be guessing when it comes to investing. You want to be, because it's all probability. There's no set holy grail in terms of the 100% completely accurate, completely reliable strategy. Market conditions do change. These instruments and do change over time and vary between market conditions. But hopefully, with this system and with these core principles, learning the reasons why we do what we do in the order we do it, and why we do it, why the way that we do it, will give you that core philosophy that you can then kind of manage and be able to cope in varying market conditions without without letting your emotions or risk management suffer, and eventually your portfolio suffer as a result of not being able to adapt to varying market conditions, right? So this morning you will have noticed that the set of indicators that I had on screen didn't look like this. So yes, it's a new indicator that I'm going to show you, and again, it's just the same principles and the same again methodology behind it. So our principle and our core system here at ThetaFin is an algorithmic approach. I've mentioned this already, and we want to be able to use this to identify the bull runs, right? So again, depending on what strategy that you are using or you're trying to implement, let me just close this down and kind of zoom in and home in on this a bit more. So we're currently clearly in a downtrend. How do we know this, or how do we know that we're in a bearish market? Right, lower lows are being produced or have been produced over time. What do I mean by lower lows? Right, it's being able to identify these candles in terms of the direction the market is moving, right, in this manner, right, and it's creating lower lows. There's momentum to the downside, right? And lower lows are being created, lower highs are being created. Whereas the opposite of that would be if we were to approach a market and it's in this kind of state, right? Where higher highs are being created as well as higher lows being created, right? That would have been bearish run, right? In terms of it, price rose from around 16,000 USD to 30,000 USD over the space of the first few over the space of six no sorry 6 months 4 months, right? So from January 2020 to 2023 to April 2023, the price of Bitcoin rose by $5,000, right? So it was a bearish, so it was a bullish market in those particular market conditions, and then since then it ranged for a bit. Again, another cycle where the market is ranging because it's not enough volume in either direction, and then it's currently on a bearish and it's on a downtrend. So again, the title of this video is identifying the bull runs. And again, we want to do that, or you, the prospective crypto investor, Bitcoin investor, someone that's got an account on trading, an account on Binance, an account on Coinbase, an account on crypto.com, Kraken, any of these other, coin exchanges where you are simply just looking to invest your disposable income at the end of each month or at the end of each year, and you want to, or you have been placing it into altcoins or cryptocurrencies in the hopes that you can make 10 to 15% return on your investment, and then sell, and then continue repeating to do this, or whether you've got an account where you with a broker who allows you and where cryptocurrency trading is something that you're allowed to do, as is the case for me. As I said, I'm a professional. I've got a professional accreditation with Pepperstone, meaning that I had to pass various qualifying criteria, and that is one of the benefits of being able to be recognized as a professional trader. Amongst other things, I'm able to trade varying assets within that broker. So, right. Getting back to the topic at hand, the reason why, a prospective crypto investor would be interested in being able to identify the bullish markets is because that is when price is increasing. That is when we've got momentum to the upside. We've got market conditions that support the fact that volume is within a particular trend and the market is trending, price is rising. So again, from here it rose from 25,000 US dollars to 30,000 US dollars. A prospective crypto investor or crypto trader would be interested in being able to get in these market conditions, right? To be able to make that £5,000 or $5,000 gain on price, and then be able to avoid this choppy market, or be able to kind of know what to do and identify these choppy markets, as well as being able to identify when a bearish market, we're in a bearish market at the start of that trend. If you're trading it, if you're implementing a trading strategy where you're interested in the bearish market conditions, again, being able to identify these and knowing what to do depending on the strategy you're implementing. That's what we're going to go over today. So again, you can go into this, you can view this in detail on my previous live stream from about 7 hours or so ago. And you can go into the core principles. So I won't spend too much time explaining it. I will explain it for the sake of referencing it. However, if you want to know more and kind of find out the ins and outs and the details, you can do that by going back and viewing that particular video. So with that said, yeah, let's go into it. Right. So identifying the bull run. So what we want to do here, I've got an And again, I'm not going to leave any stones unturned. I'm going to explain each and every single indicator that's on my screen at the moment. So what I've done is let me just get rid of some of these things which are noise, and I can just redraw them back on afterwards, so you know, so that you guys are getting the full picture in the right order. Right. So what I've essentially done here is placed a moving average indicator, so I've just removed it so I can put it back on. So going up in it within trading view, um, clicking indicators at the top, and then placing a moving average onto our charts, right? So I'm using a smoothed moving average, SMA, right? Right. So I'm placing a smoothed SMA onto my charts. It's done that in the background. I want to double click it. Um, I'm just changing the style to yellow just so that you can see it. Increasing the thickness again, just for your visibility. You don't need to do this on yours. Obviously, if it makes things easier for you, yeah, by all means, follow along and do the same. And then I am setting the length to 14 as an okay, right? What that has done is given me an average or moving average, right? Based on price over, and just explaining what these things mean. The length means the period that you want that moving average to cover. So what this is doing is giving me an average of where price was over the last 14 periods. And the periods really apply to what time frame you're looking at this particular chart on, right? So I'm currently looking at this on the daily. So this means that this line, or this yellow indicator, this moving average that I've placed on my screen, is giving me a smoothed out, as in like the points, and each point isn't, it's not like a staggered line. It's not a very dramatic line. It's a smoothed out average, right, between each of the points across the last 14 periods. Why have I done this? So I'm using this as a baseline, right, and watching out for when price, as in the candles now, not price as in up here, but price as in the candles, right, where they close on each of those days. I'm looking for crosses on either side of that moving average, right? And I'm going to use that as my first indication, not my trigger, not my, green light to go crazy and start opening and closing positions, or opening and putting my disposable income into coins based off of this alone. This is just, again, go back a few steps. We're taking an algorithmic approach to what we're doing here. Therefore, it means this is one step of a few different conditions that also need to be met and need to be in agreement with all of the other steps before you can make a move, before you can open your position and hopefully make a lot of money from it. So the first thing that we want to do here is look, and I will now get the brush out. Um, do that correctly. Use the highlighter of that. And I want to make blobs on every cross. So regardless of the direction, so whether it's a cross to the downside or a cross to the to the upside, doesn't matter. I'm just marking them. I will mark them in different colors. So I'm going to start with the crosses to the downside, just because the most recent one was that. And I'm marking it in white, right? Each and every single candle that crossed, that started above and crossed on that line, I'm marking it, right? I may not mark each and every single one because of time. I'm not really being accurate with it. But you'll see something key in a second. I won't, should I go? Yeah, let me not cut it short. Let me not cheat you guys out of this. So I'm gonna mark a fair few on here. Goes I'll go as far back as here, right? And now I'm gonna change and mark, use a pink. No, I'm going to mark using green. I'm going to change that to white so that it's bacon. Yep. And then now I'm going to change this to a light blue to mark. Now I'm marking all of the longs, so all of the crosses to the upside that happened on across that moving average, right? Me trying to move the chart with the highlighter, right? Another cross there, and I think that was the last. Yeah, that was the last one. We've got one that's sort of about to happen, but hasn't happened yet there. So with that said, we've got some points of interest now on the chart, right? Not points of interest as in, the POI that you hear on smart money concept strategy, but points of interest in terms of what we're looking for, right? Now, why have I done this? Again, what I'm trying to highlight to you is how to identify bull run signals, right? In terms of, the first step on our algorithmic approach to what we're doing here. Let me mark one more scene, another one that I can use for this example, right? So I've got a few white dots, um, got a few white dots and a few blue dots that we can now focus on and home in on, right? Just for the example of being able to understand what's going on here. So each of these crosses, right? Now I did this on purpose and I dotted these crosses on purpose. Can you see the correlation between a cross on this average? Start from the most recent one. Each cross on this average is followed by a move in a certain direction, right? A trend, right? Whether how big or small, not what we're focused on right now. But each of these moves, each of these crosses lead to a move and a trend, right? Regardless of the direction, again, I'm not being biased. Not being biased. Doesn't matter how big or small that move was just yet. But again, as I said, I'm not going to cheat you guys out of this. I'm not going to pick favorable conditions where I'm only talking about the big trends. I'm also going to touch on these small trends where nothing really too big happens, right? I think it paints the picture in terms of what we're talking about, doesn't it? So now with this actually I like in terms of this format, it actually works out a little bit better than my MetaTrader in terms of having all of these instruments at my quick disposal. Even though I do prefer MetaTrader in terms of the overall customization and the number of indicators that I have got in that system, I do prefer it for that reason. But in terms of teaching and showing you guys what's going on, I got to say that TradingView, it's second to none in that sense. But it's just the customization and how long MetaTrader's been going and the amount of indicators developed and how much you can strip away at them. It is the better and more powerful tool. But yeah, definitely TradingView for this purpose. It's great for you the viewer. So yeah, essentially here what's going on and what we want to just get straight to the point on in this identifying the bull runs, right, before they happen. So as I said, there are different investment strategies that can be implemented. If you are someone that's just focused on buying and placing your spare cash into your crypto portfolio on one of these exchanges, you're not going to be interested in the down, the trends to the downside or in the bearish market conditions. You need to know when they're coming in order to, move your move your funds and kind of collect your profits and wait for the next bull run, or bullish trend. Even let's use that word instead, bullish trend. Um, but in terms of your interest or your interest in the market, it's more these bullish runs, bullish trends where you're experiencing and getting massive spikes in terms of price. It going from 22 here, 22,412 to 28, so about $6,000 change. Yeah, you'd be interested in that, right? It's a good gain in terms of the percentage. It's over 10%. It's nearly 30% in terms of what it's gained. And again, in this scenario where it's gone from 16,000 to 23,000, you're again going to be interested in those, right? So again, as I said, this is just the first step in terms of our identification, right, of these bull run signals. Yeah. So again, I mentioned that there are several strategies to implement here and that we're taking an algorithmic approach. And the next thing I'm going to show you is, and just explain to you is what's happening here when the market's ranging, because we touched on market cycles earlier where, there are different things. There is a market that's trending. There's a market where, you've got bullish conditions, bearish conditions, bullish conditions, and then ranging, right? Consolidation, some of you may call it, or just a ranging market where there's not enough volume to push the price in either direction because of the amount of speculation. There's the big banks, the big institutions, the big players in terms of who's holding a lot of those, the crypto, who's driving the crypto market, or whatever asset that you're actually focused on at the time. There's not enough volume for the market to trend in either direction, right? Because these big moves require volume. Now, how do we, as I said, this is about taking an algorithmic approach and taking the emotion out of it as much as possible. Now, I'm going to show you how to do that, right? By, again, adding another piece to the algorithm, right? It's been on the chart the whole time. I've just kept it hidden away and tucked away. And it's a slightly different tool to the one that I showed you earlier. Again, it's something that I like to try and use these things and use them in tandem. So this particular indicator is called an Aroon up down, right? An Aroon up down is an indicator that measures the strength of an uptrend by calculating the number of periods since either price was at its highest occurrence based off of a set number of periods, right? So at the moment it's set on 14. I like that number. It's a 2-week window if you're looking at the daily, and it's a 14 candle period if you're looking at the hourly. Whatever time frame you're looking at, it's measuring where price was in either direction, right? In terms of the lowest or the highest points, so that you can get an accurate assessment of market trend and the the strength of a market trend. So how can we now pair this indicator or this in terms of identifying the strength of a trend, the strength of volume, also using it as a confirmation of our trend so that we avoid these choppy market conditions where it's consolidating? How do we do that using the Aroon up down? I'll show you, right? As I said, it's got several uses. So the Aroon up, right, which is, I've changed the colors because I think it comes as default as a blue and red, which doesn't really, I like to match things so that the things are color coordinated, so it makes sense to me. And visually, when I'm explaining it to someone else, I'm able to kind of associate red with a bearish market condition or downward trend or a short, and I associate green with bullish market conditions or going long. So again, I like to match my oscillators where where there's multiple lines or multiple um, things to kind of look at. I try and make them akin to the market conditions. So again, so the Aroon up, yeah, which is this green line on my oscillator, is measuring the strength of an uptrend, and it's calculated based of the period which is set to 14 at the moment, and then that helps me identify the strength of an uptrend. And then the red oscillator here is the Aroon down, which measures the opposite to that, right? It measures the strength of a downward trend by calculating the number of periods. So for over the last 14 days, how far has price been away from its lowest point, right? So then with this tool paired up with, the crossover that I've shown you, in terms of, if you look back at each of these points that I've shown you on this 14 period moving average, every single cross is followed by a move to the upside or to the downside at varying sizes, right? Again, touching on market cycles, where you've got an uptrend market that's trending in an upward direction or in a bullish direction, and then you've got a short or bearish market that's trending in a downward direction. Each of these moves are started off, and the first indication of each of these moves is across that moving average over that 14-day period. You can customize this and kind of play around with the inputs. I like 14 for Bitcoin USD, and that appears to work. And again, taking an algorithmic approach means that we can now use that as our first indication, right? Okay, cool. It's crossed. Now, what does the Aroon? Where is the strength in terms of where's the strength of this cross and this trend, based off of the Aroon down, right? Because if we've seen a cross to the downside on our first indication or our first signal, which is the baseline crossover, we then need to consult the strength of that trend by checking the volume based off of this Aroon up down, because that's what it's measuring. It's not just an indicator where we're looking for crosses. There's method to the madness, right? It's not because again, I have to stress this all the time, because you always see people trying to show you strength and resistance areas on by drawing trend lines, but there are indicators that measure this, that's based off of facts, not speculation. So when you're taking an indicator heavy approach to your trading, doesn't mean that you're doing, anything less. You're just using the tools, and you know what the tools mean and what they represent. So you can take a mathematical approach to this. So again, the Aroon down, which measures the strength of a downward trend by calculating the number of periods since the lowest price occurred, right, within a given look back period, which is 14, that then assesses that strength of that trend. So if I look at this now, okay, a crossover occurred. I check where my Aroon was, which line, which one is kind of winning that strength for, right? Okay, it's at that particular moment, it was my Aroon up, the green one, that was above it, right? There was more, it was higher than the other one. So there's more of an upward trend was still kind of in play there, but it eventually then caught up. But again, because of now, I'll touch on, where these lines are, because there's more to this indicator than meets the eye. But I'm just going to quickly flash back. And again, in this particular region where we had a cross, it still didn't give us a signal to take that particular short there, because there was still a lot of buyers in the market. And guess what? The market ranged. It was flat for a while, until eventually the Aroon down signaled that there's a lot of volume in terms of people buying, and volume to the downside, right? That when this cross occurred here, this particular one, you've got that indicator to say, yeah, the strength of the Aroon down is now on top of the Aroon up, right? There's more of a measurement in terms of people selling, so that you've got now enough momentum, and then I'll be able to now build up in terms of how high these lines are. I'll talk about that in the next segment. But if you go back and each one of these crosses and check, look here, the Aroon up, right, was winning this strength war, so that you had enough volume here to trade and follow this bullish run. Because the Aroon up, the green one, as I said, this is the reason why I color coordinate things. It's just so that I am able to look at things, make an assessment within a few seconds, and it makes my technical analysis faster, less emotionally driven, less speculative, because I'm using a set of indicators that I fully understand in terms of the principles behind what's going on. I'm not leaving it up to chance and leaving it up to, chance or guesswork or trend lines. It's all numbers driven. And again, it's just about finding these indicators and knowing what they do. So again, and then using them in tangent so that you're not making decisions off of one and the other. You're pairing them up in a way that it keeps you out of certain trends where it's early. So for example, here where we had a little touch on this, it could have been a cross here, right? In terms of this candle, it could have been an indication to cross, where if you're using this on its own, you could have been like, oh, you know what, let me try and get in, because price has been down at 26k for a while. But look, the indicator hadn't confirmed anything. The Aroon down was still winning that strength war, hence why this was flat for a few days. But then even when this cross happened, it was still flat because there was still a lot of strength in terms of people selling, right? But then as soon as this particular cross happened, the buyers had the volume. So there was enough, there was enough there for that to trend and price to trend from 26k and follow along all the way up until 31k. And the Aroon would have helped you get in and be able to take advantage of that particular market condition. If you'd have bought Bitcoin or put £500 into Bitcoin or whatever it is, you'd have been able to make your 10% return on investment there, right? Or 15%, whatever the number is. You'd have been able to get in and make a return on your investment, right? So then if you follow along, and again, there are times where it gets you in for small gains, but again, following market principles and getting back out, right? You could still use this as an exit indicator, but I'll touch on that further along in this stream, right? Again, there are times here where you avoid taking certain losses, because even this here, where it's as if it's a signal to go long, sorry, to go short, the indicator didn't agree with it, right? It didn't agree because it's like, okay, there's a lot of strength, there's more strength for the Aroon up, right? For people buying than there is selling. So ignore this signal to go short. And guess what happens? Even though you get a bit of traction and a bit of momentum, it doesn't go anywhere, because it's, you'd have avoided that. And this trend and this theme carries on throughout, right? In terms of here, yeah, you get a massive spike, but then it gets you in from 25k to 30 odd, or no, 31k. It gets you in that trend in terms of that bull run. There's a really, really powerful indicator. And again, I show you live conditions and I try and explain it in terms of the numbers, the maths, without drawing trend lines. These are just here in terms of just showing you points of entry and these lines and trends are, and identifying market direction. It doesn't mean that you have to do it. It's just more so for teaching you and showing you guys what to do. So again, we've touched on that. And now I want to show you the Aroon up down in a bit more detail. Yeah. So gosh, you're not able to see the right hand side of this particular indicator, but I'm hoping that on the left here you can see. Oh, okay, that works. So you can see it on the left. So you're not at a loss. So if you look at the left here, where these numbers are flashing up, there's a green set of numbers and a red set of numbers. Um, you've got like I think it's 7.14 or 14% and then 7.14%. You won't be able to see the red very sharply. This has given you now volume in the market and volume of the Aroon up down, right? So this is a double, it's like a double, you can use it for multiple purposes, right? Not only as a confirmation indicator for your trend, but you can also use it to assess volume because it's got a level on here, which you can't see on the right hand side just because of how the screen's set up. But it's got a level. So you've got 100% at the top and then 0. So this signals the strength of volume or the rate of volume, right? So 0 meaning not a lot of volume, hence why, you know, it's moving, like you're getting these, it's kind of like a diagonal cascading pattern that it's creating because it's also measuring the volume at the same time. So the strength is being measured by which one's above which, right? So let's say, for example, we're down here. The red, so the Aroon down is above. There's more volume than the Aroon down, right? But then at the same time, being in the market conditions, I wanna put this on the chart a bit better way. I'm gonna zoom in, doing what I want. Okay, there we go. I think that's a bit better. Now let me remove these distractions, right? So if you look in this market, right? So let's say you got a cross in this particular scenario, huh? Or cross here. What you want to happen or what you want this to indicate. So regardless of the direction, when you've got the so I'm looking at the top to bottom on this part of the Aroon up down. Let me expand it, right? So hundreds at the top, zeros at the bottom. So when you're going across and measuring in terms of when you put your crosshairs on any area of this, it shows you that when it's at 50%, that's like it's a balanced, it's scraping by in terms of volume, in terms of the strength of that trend. So even if it's above, you can now use this as a kind of like confirmation, the final confirmation in terms of yes, you've got the initial signal, the crossover on the chart, on the moving average. You've got the second signal or second confirmation, which is the Aroon strength or the trend indicating that yeah, it's in agreement, you're currently in a downtrend. And then you can also then measure the volume, the amount of volume. So if it's above 50, then you can take that as an indication. Again, it's not the best volume indicator because I think that the one that I showed on an earlier stream is better for me personally. It's a better volume indicator, but I'm just showing you that this also does measure volume in a slightly different way. But the core use of it is just, it's very good in terms of being a confirmation indicator to get you in, right? Then you would put something else to measure volume, but you can also use this to measure volume. And then from there, if you are someone that's you know, doing a pump and dump strategy, so you're just literally interested in identifying the buys or the pushes, the bullish trends, which is the purpose of this video, you can then make your investment at the end of the month or whenever you're ready. Um, put X amount into Bitcoin confidently, knowing that yes, this cross has happened, and you know, I've got the support of the strength of the Aroon up. It's above the Aroon down. We're in a bullish market condition. You place your order for X amount, and then you can hold that. You can literally hold on to it, right? Now I'm looking at the Aroon situation here. You can hold on to it and literally follow along. As I said to you, exit strategy. Follow it along all the way until you get across, right? That's one strategy that you can implement, right? So you identify the crossover in the moving average, make sure that again, algorithmically speaking, all of these conditions need to be met. So you've got your cross on the MA, you check, and it's supported by the Aroon up, which is 100% over 78%. So the Aroon is the Aroon up is the favorable trend. You've got volume because it's above 50%, right? So you take the trade, you open it, right? You put your $100 or $1,000 into a Bitcoin order on Coinbase, right? You can use this system here and go and do everything you need to do on your phone, right? Place it into your coin on your Coinbase and literally hold on to it. So from 22/7, you hold on to it up until you get this cross, and at that time, um, price is at 28. So you've made like it's made a 6K return, right? Which is 20%, right? Return on investment. And in that situation, you've made a 20% return on your hold, right? And you've not done anything. It's just you've literally just followed a set of principles, and you've been able to make a 20% gain on your investment. So whether that's £100, you've now, sorry, whether it's £1,000, you've now got 1.2K in terms of the value of your Bitcoin portfolio. You've gained 20%, right? And it's at that moment you cash out, right? You cash out and then you wait for the next signal for bull entry, which is here. But again, what you do is you check, you've seen a crossover, but in this particular market condition, the 7%, the Aroon down is 78%. And that doesn't mean that you go in the other direction, because you're not getting a crossover to the downside. So you just ignore it. You leave it alone, right? So again, you're seeing how these things looked at in an algorithmic manner, you're able to avoid and only take profitable uh, bull entries and bull investments into the crypto market. So again, I'm looking at BTC USD. I can change this into any other crypto coins. I can look at let's put XRP. It's been popular. It's been in the news, right? So again, it's the same principles apply. It doesn't matter what. Whoa, that's huge. Right? So it doesn't matter what principles, right? Even here, like with the recent explosion in terms of which I think is what that is there. But you can see even in these conditions, you still would have been able to comfortably get in here, right? Because when that cross happened, it was supported. So if we'd have gone down onto the lower time frames, it was supported by the Aroon up, where it was 100% versus 7%. You go in, boom, you're able to ride that from 50 cent all the way to, sorry, yeah. So from 50 cent all the way to 80 something cent, I think it got up to like 90 something. But again, if you were to follow that all the way to the cross, it's not huge, but it's still a gain, of 20 cent for every dollar on that particular in that particular instance. And again, you're able to follow the exact same principle. It doesn't matter which altcoin or just bear with me a second. It doesn't matter which altcoin it is, right? It doesn't matter which cryptocurrency it is. Ethereum, the same principles apply, right? So if we're looking just for identifying signals to go long or for bullish conditions, and we're using that crossover coupled with, again, I'm not going to cherry pick. I'm trying to be very conscious not to cherry pick. I'm going to go through the motions again and highlight each of these conditions, right? So if I get my highlighter out, check just for crosses. So point mark there, point mark there. Again, we can point mark some of these, to be honest. Just to show that yes, there are some casualties, there are some false positives. But again, we're able to take advantage of the bull runs. Um, and essentially, that's what we're looking for here. So we're identifying the crosses on the moving average as our point of entry, and then we're seeing what happened in terms of the um, the Aroon up down. Did it agree? Was there volume? And then how much would we have gained? So in this first instance, right? So the last cross, not cherry picking, the last cross, you would have been able to take an entry there, right? So from 18, so in terms of if your platforms allows you to trade and sell it in both directions, you would have had an entry here, right? In terms of what we're looking at Ethereum, yeah? You'd have had an entry there when price was at 18K, and you'd still be, oh, so from 18 and Ross, which was there. So from 18 to 17, this small gain, right? From 18 to 17, small gain. Um, and then there was a continuation. So again, that's if you're using this, these are some of the casualties in terms of using the same entry as an exit. As I said, there are better exits, not necessarily what I use for exiting, because I do try and use something that will be a bit more slower in terms of getting me out of a continuing trend or continue a trade with momentum. And these are some of the principles and things that you'll be able to learn in terms of the course material. But again, these are just the foundations of the system. These are the core principles in terms of getting in and how we identify these conditions without drawing things on the chart. And again, I'm just in this scenario, I'm just drawing in terms of just highlighting and pinpointing so that you can follow along. But you can do all of this just by looking, identifying, and maybe writing some notes down in terms of, okay, yeah, this condition has been met for this currency, this condition. So then you can pick and choose. You can cherry pick which ones, you're more confident about. And that's the only kind of note making that you need to make. But again, identifying bull runs, right? So we've got another instance here where you've got a cross. The Aroon up agrees with it, and then you'd have followed it to there, right? So from 17.7 till about 18.8, right? So in terms of the measurements, in terms of points, so for those who, or not my measurement tool here, looking at volume, I'm too used to using the measurement tools on MetaTrader. Just bear with me. Second, there is a ruler. What's there is? Right. So measuring from there to it's a 5% gain. Just a 5% gain. Right. So again, with that said, you can just see how all of these things do apply. They do work in tandem with one another. And the principles just go on and on and on. And these are, again, core fundamentals that you can use regardless of the instrument that you're trading, regardless of your strategy. You can use them and use them in unison, use them in pairs. And same goes for altcoins and emerging trends. You're able to have a look at and see these things coming, implement a top-down approach to them. I haven't really touched on top-down approach in this particular stream, but in the previous one, that was all available to you. And then yeah, with that said, obviously if you're implementing more of a long-term hold, you want to probably look into getting an offline wallet, something like Ledger, um, and keeping your cryptocurrency secure. I personally feel like it's more I guess safe or safer to be able to buy in spurts or invest in spurts, cash in your gains, and then go again and build your portfolio up that way so that you're selective. So you're not holding and holding over a longer period of time. You might find it to be more profitable and kind of safer for you because yes, it's still a new space that um we're having, especially if you're trading and doing this with altcoins, we're having regulations come out left and right, which are killing volume and killing the market conditions. But if you're able to find these pockets of volume and where there are strong signals to get into long positions on cryptocurrencies, my suggestion would be to buy on your crypto exchange. Go into MetaTrader or TradingView, do your analysis in this manner, use some of these principles, and then be able to cash in on the profits and be able to just wait until the next opportunity. It will be a lot safer. It's a more risk averse approach, and it allows you to be in control and be able to kind of get your returns them into something else, maybe put them into a different position that's presented itself. Yes, it's going to require more work, but you're able to then chop and choose and diversify your portfolio while doing so. Because at the end of the day, it's about, if you see, yeah, like if it's something that you believe in, or if you want to do a more long term approach, you can do your analysis in terms of the the longer time frames, but things kind of go wayward. As you can see, like if try and zoom out, the market's not been alive long enough. So in terms of the longer term, it's all over the place, right? So my advice would be to stick to the daily. Let that be your bread and butter because things are settling down. You'll be able to apply some of these indicators, then the maths will make things make sense. And you can apply some of these core concepts straight away and do it in that manner, right? Um, and as I said, in terms of I've touched on taking your profits off the table and following certain principles, there are, better ways to do it out there in terms of indicators to get you out. Um, things like trend continuation, but I touch on that more so in my course material. That's something that I try and teach, people that fully understand these concepts in terms of how to enter, being disciplined in terms of what these indicators do, what they're measuring, why we're not drawing support and resistance lines on charts, understanding these core concepts in terms of the technical analysis and what we're using it for, so that things are not just lines on your chart. You're able to actually explain and you understand why it is what it is they're measuring. It gives you a full understanding, so that even if you are, yeah, using an indicator, I can do long maths, but there's a calculator in front of me. I'd rather use a calculator as long as I know how to use it and the principles at play and how to, calculate it to get what I want out of it. Why would I make things harder for myself, right? And this is what these tools and these indicators are here for. So with that said, yes, I've covered understanding the market cycles. I've covered identifying the bull run signals. I've also covered various strategies in terms of holding, trading, and the importance of diversification of your portfolio. I've touched on emerging trends in altcoins, and then I've also briefly touched on wallets and coin security, and my thoughts on that. And then we also showed you a few things in terms of how to exit or plan your exit from a trade, and taking your profits off the table. My thoughts on that. And yeah, that kind of marks the end of this live stream. It's just a little over an hour. I finished a bit earlier than I thought that I would have. I thought I was rambling on a bit at times, but yeah, managed to finish about 15 minutes earlier than I wanted to. So yeah, thank you so much for tuning in, or thank you so much for watching. And I will catch you on the next one. Good night.